Okay, this is Mark Esby once again, and it is the 6th of August, and we're in the afternoon. After market close, we're taking a look at the SPX, the Standard & Poor's Large Cap Index, and as always, I must remind everyone that all that we speak about here is for educational purposes only, and never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. Well, very similar to the Dow analysis, in that we had some narrow range trading days that began to fade on the upward move, and yesterday, Thursday, we put in sort of a high wave doji and showed a lot of indecision. And then today, although it was very impressive on the bulls part to push it back up from such a bearish day, it did end up losing today. It was down today, and one would characterize this candle as somewhat of a hanging man type of a pattern. And the psychology here, as I had mentioned before in the Dow, is that it should impress some of the bullish plays, the people that are long, that the bears certainly have the capability to move in and press this down right now. We're looking at the 200, and it has really sort of oscillated above and below the 200, and one would characterize this as pretty much of a hold if it comes back down this way to the south. We must recognize the fact that we did have this 50-200 crossover of the 200 simple moving average, and that is a significant occurrence, so we need to really respect that. It looks like this may in fact be an ascending triangle, but we don't have enough touches. Had this come up here and touched, or we would have had several prior touches up here, this would have been characterized as an ascending triangle, and that would be bullish. But I tend to look at this more as a double top. So we have the top here and the top here, and it's beginning to fade off of that top. One could extend this back here to late April, and again, we didn't have a whole bunch of touches here, which would make it more significant, but you can draw a trend line there. You can make your own judgment as to how valid that may be. It would be more valid had we had more touches here. If we did recognize that, that would be recognized as a symmetrical triangle and looking for a breakout or a breakdown. My thought is that we are in fact going to break down and continue to the downside, and we will first look at this swing low that's occurred right here at about 1088. The next swing low occurred here in mid-July at 1057, and then we put the low down here at 1011. Wanted to also recognize too, if you looked at a 5-year chart, you would see that there's a trough coming through here, and this would be the trough or the neckline for a head and shoulders pattern. So if it did go down this far to 1010, the actual intersection of the trend line for the neckline would probably be in the neighborhood of about 990 in that area. If it did break down below there, that would be quite significant. We are in an overbought area with the stochastics, and the MACD is not showing me anything other than bullish signs at the moment. If we did break to the upside, the first area that I would look for would be the swing high that occurred here in May, and that's just above 1170, about 1175, and then we would come back up again to the April highs, which is at 1220. Although my feeling is we're not going in that direction. We're going to be coming back down here. So let's look for these support levels going down, and ideally on a move like that, you would like to see increased volume. All right, we're going to move over and take a look at the Comp Q.